Hello everyone, welcome to today's session. So today we will start a new chapter, that is chapter 6, completion and review. Okay. Hope everyone has read that chapter. Okay. Because we will be focusing more on the practical side of the chapter rather than the theoretical side, so that you could understand how and how to answer the questions related to this particular topic. Uh, Okay, so let's start. Good morning. Good morning, Viraj. Good morning, Salesh. So let's start the session. Okay, so chapter 6. Now, chapter 6 basically is, covering three major essays: 560, 570, and 580. So it has essay 560, essay 570, and essay 580. Okay. Essay 560, when I talk about, it is nothing but subsequent events. 570 is going concern, and 580 is written representations. Okay. So these are the three major essays that are, part of chapter 6. Now let's understand first, why these essays are important and why and where they have a, major role to play. That too with one good example. Okay. So let's say XYZ Limited has appointed Mr. A as an statutory auditor for FY 22-23. Okay. During the audit, Mr. A verified all the litigations and claims in order to validate the reporting for contingent liability and under reporting of liabilities. Means that Mr. A verified all the litigations and claim in order to verify whether the reporting for the contingent liability is appropriate and is there any under reporting in the liabilities. However, nothing was identified as observation. Okay, nothing was identified as observation. Then on 31/7/2023, 31/7/2023, Mr. A signed Mr. A signed audit report for FY 22-23. Okay, on 30/7/2022, Mr. A signed audit report for FY 22-23. However, on 1/8/2023, Mr. A got to know about a notice served on XYZ Limited by let's say by Environmental Pollution Control Board with fines of with fines like containing fine or penalty of rupees, let's say something material amount containing fine and penalty of rupees, let's say 250 crores. Okay, very big material amount. This notice was served on 30/7/2023. Okay, but auditor only came to know after after signing of audit report. Kindly guide Mr. A in respect of this new litigation identification. Okay, so understand, on, let's say Mr. A was hired for FY 22-23 audit. So on 30/7/2023, then 31/7/23, then 1/8/23. These are the key dates. On this date, notice was served, signing of report, signing of audit report. But on this date, discovery of notice happened. Okay, this whole portion is my FY 22-23. Somewhere till here, that is 31/3/23. So now you guys tell me what Mr. A should do in this scenario. Simple. Okay. So Mr. A, he's an auditor of XYZ Limited. On 1st August 23, he discovered a notice which was served on 30/7/2023 before signing of audit report. But he only discovered after signing of audit report. Now the amount is 250 CR, which is material amount. What he should do? Come on, guys. What he should do? Yes, it is after issuance of financial statement. Come on, guys. What you would do in this scenario, or what you will suggest to Mr. A? Come on, guys. What is required to be done by Mr. A in the current case? Good, Sailesh. Good, good, Shruti. Good, Yadu. Very good. Absolutely correct, Tanisha. Come on, guys. I've received four answers. Correct. Correct, Mr. Yadu. So, see here, now you understand why we need a essay, because we need some guidance about events which are, uh, you know, are coming after signing of my audit report. Okay. And these are the events which require some audit procedures or some intervention from the side of auditor. Okay. So let's say, for example, discovery of notice after 1/8/2023. Now, in this scenario, what I will call is, this scenario will be known as the facts which became known to auditor after the date of audit report. Okay, after the date of audit report, but before the date of financial statement. Okay, so these are the facts which became known to the auditor after the date of audit report, but before the date of financial statement. Now, if any such fact has been known to the auditor and at the date of, like after the issuance of the audit report, and if auditor would have known this issue before, you know, that may have caused, the auditor to amend the audit report. Let's say, for example, if I would have known this issue before, then I would have amended my audit report, because the amount is material, 250 CR. Okay. So if I would have known this 250 CR notice before I signed my audit report, I would have qualified or asked management to, disclose the fact. Now, what will be the scenario is here that uh, Sorry. Now, I will ask management whether you have disclosed or not. If not disclosed by management, then it becomes my responsibility to respond to that fact, because that would have, amended the audit report if I would have known it earlier. If I would have known it at the time of signing my audit report, I would have, asked management to include in the financial statement. And if management would have not included, then I would have qualified or issued adverse opinion. But now audit report is issued, financial statement are signed. In that case, I need to, respond appropriately. Now, what I mean by respond appropriately, when I say respond appropriately, that is, I need to discuss the matter with the management. I need to determine whether financial statement requires any amendment. If yes, if yes, then how the management is addressing the matter in the financial statement. Okay, whether management is ready to amend the financial statement. If yes, then I need to carry out the procedures to the extent of the amendment. Okay, so I need to carry out the procedures, audit procedures to the extent to the amendment, and I need to provide auditor's report on the amended financial statement. Clear? So, for example, I need to obtain understanding of any procedure that management has, performed on this particular area. Okay, I need to inquire management. I need to read the minutes. I need to, read any other information that is available. So, based on that, I need to, understand why this was not disclosed to me on the, before the signing of audit report, and why it is being, kept hidden from the auditor. And accordingly, I need to do some procedures. Okay. So this is something I need to do when an event occurs. So that's why, I took this example to explain you why we require SA 560. SA 560 guides us in these kind of environments where you come to, identify a fact about, some events once you sign your audit reports. So at that time, what to do? Okay, will be something, explained by and provided by SA 560. So SA 560 will guide you at that particular point in time. I hope I'm clear. So you understood the need of SA 560. Now, this is the case of, as I told you, facts which became known to the auditor after the date of audit report, but before the date of financial statement. Now, there are two categories of events that occur, basically. So there are basically two type of, events that occur. That is, just a minute. So let's say, for example, this is the date of appointment of auditor. Or instead of date of appointment, let's say start of financial year. That would be more appropriate. Okay. So I'll call this is as a start of financial year. Sorry. Now, somewhere down the line, we will be have a date of appointment. So let's say we have a date of appointment. Okay. Then we will have an end of financial year. that is 31st March or whatever. Then we have, let's say, for example, date of audit report. Okay, the date when audit report has been signed, and after the period of period, then after that. Okay. Now, events can occur during any of the period. Okay. So let's say, for example, events occurring from this particular period to this particular period. So events occurring from this particular period, from start of financial year till the end of financial year, is that something I will audit. So events are audited as normal. Like, whatever happens, I need to audit between this particular period. Fine. As per different essays that is required. Okay. Then events from the end of financial year till the date of audit report. Okay. Uh, till the date of audit report is something, kind of events which are also required to be seen by auditor. So I call these events as a facts or events occurring between the date of financial statement and date of audit report. Events occurring between date of financial statement. This is known as the date of financial statement. And date of audit report. Okay. Now for these events, the events that are occurring between the date of financial statement and date of audit report, what is required? For events occurring between the date of financial statement and date of audit report are required to be, somewhere audited by auditor. So auditor is required to perform some audit procedures. He needs to design and obtain appropriate audit evidence that all the events occurring from the date of financial statement till the date of audit report which require adjustment or disclosure in the financial statement has been identified. Okay. So there could be two type of events. Events that provide additional evidence of the condition that existed at the date of financial statement, and even, kind of those events that provide evidence of condition that arise after the date of financial statement. Okay. So if the event was there, okay, subsequent event was there, that is event occurring between the date of financial statement and the date of audit report. So if a subsequent event is already there, okay, then the auditor is required to perform audit procedures for that event, for that, additional thing that has happened. He needs to make sure that he collects all the audit evidence regarding that event, okay, or regarding that adjustment, okay, or regarding that disclosure. So that event, might require an adjustment or disclosure in financial statement as per applicable financial reporting framework. And based on that, auditor is required to perform audit procedures. Okay. So if the event requires adjustment or disclosure, auditor is required to perform audit procedures. Auditor is required to design and perform audit procedures for the events that require adjustment or disclosure in financial statement. Okay. If the event requires disclosure or adjustment in the financial statement, then the auditor is required to design and perform audit procedures to make sure that the adjustment or disclosure has been done appropriately. Okay. Now comes the matter that after issuance of audit report. So after issuance of the audit report, these are the events are known as events, or rather I don't call these as the events, I call them as the facts, because these are no longer events now. These are the facts known to auditor after date of audit report. But before FS is issued. Now, this is something new that we need to understand. But before the financial statement are issued. Okay. So, let's say I'll put another date over here, that the date of financial statement issued. Date of issue of financial statement means the date when the financial statement are issued in public or to market. Okay. So date of issue of financial statement. So if any of the facts known have been known to the auditor after the date of audit report, but before the FS is issued, then auditor is required, to make sure that, he either, does all the adjustment which is required, ask the management, that please do the adjustment in the audit report, and accordingly on the adjusted financial statement, the auditor is required to perform or issue new audit report. Okay. Then the last one will be after this particular date. Even the financial statement have been issued. So these are the facts known to auditor after FS is issued. Okay. So once the financial statement are issued, if any of the event is now known to the auditor, then for that event, auditor, what is required to do, we'll see. Redraft here. Auditor after date of FS, no, after date of AR, but before issue of FS. Okay. Now we need to understand these three categories. If the event is occurring between the date of FS and AR, events or the facts known to auditor after date of year but before issue of FS, and facts known to auditor after date of FS, means issue of FS. Okay. So we need to understand these three category of events and what auditor is required to do in these three categories. Okay. Clear? Any question? Any doubt? Any doubt? No? So there is one question. Will the auditor be required to reassess the risk of material misstatement and fraud risk? Yes, he will be required to. So the auditor has to reassess, the risk of material misstatement and the fraud risk when a new information comes. But again, that depends upon what kind of information that has been, brought forward or just, identified by the auditor. And accordingly, he needs to, plan and perform the audit procedures. Okay. Any other doubts, guys? Okay, good. So let's understand one by one each portion. Now, first is events occurring between the date of financial statement and date of auditor's report. Now, my question to you guys is, if any of the event is occurring between the date of our financial statement and the date of audit report, okay, am I required to, provide adjustment to that event? So, if there is an event between the date of financial statement and date of audit report, am I required to give adjustment to that particular event in the financial statement? What do you say? Am I required to give adjustment to the events that are occurring between the date of financial statement and the date of audit report? Pretty easy question. Correct? It's pretty easy. Anyone, guys? Any one of you? Like, do I need to adjust those events? Good, Tanisha. Very good. Come on, guys. Am I required to provide an adjustment? Like, am I means management? Is management is required to provide adjustment for the events that are occurring after the date of financial statement but before the date of audit report? Come on, guys. Come on, quickly. Do you think that management is required to provide adjustment for the events that are occurring between the date of financial statement and the date of audit report? Okay, good Gita, good Yukta. Okay, good Yudagundalu. Now, I'll give you one example. Another example, and we'll understand whether what management should do and what auditor should do. So, XYZ Limited invested rupees 350 CR, okay, on invested rupees 350 CR in shares of TQR Limited on 28 to 2023. TQR Limited was involved in providing IT services to, uh, let's say, uh, companies of, yeah, companies situated in, let's say, K country. Okay. So TQR Limited was involved in providing IT services to companies situated in K country. A war broke out on 30/4/2023, and TQR Limited had to stop had to stop all services to companies of K country. Okay. As a result, share price fell by 90% of TQR Limited. Okay. On 31/7/2023, that is date of audit report of XYZ Limited, auditor identified, okay, that investment of rupees 350 CR is now having market value or rupees only 15 CR. Okay. Hence, auditor declined to sign the audit report and asked management to amend FS. Okay. Kindly guide auditor of XYZ Limited. Understand the question. So there was a XYZ Limited who invested 350 CR in the shares of PQR Limited on 28 to 2023. PQR Limited was involved in providing IT services to companies which are situated in a K country. Now a war broke out on 34 2023 and PQR Limited had to stop all services to companies of that particular country. As a result, share price fell by 90% of PQR Limited. On 31/7/2023, when the auditor was going to sign the audit report of XYZ Limited, he identified that the investment of 350 CR is now only having of value of 15 CR. So there is a this much decrease in the investment value. Hence, auditor asked management to first amend the financial statement and then he will sign the audit report. And he declined to sign the audit report. Kindly guide the auditor of XYZ Limited. So first of all, the first question I have is question number one. Is management required to amend financial statement? My first question, is management required to amend financial statement? Come on, guys. Come on, guys. Is management required to amend the financial statement here? What do you think? Okay, Yedugandalu. Good, Geeta. Very good. Good, Rakesh. Okay, Yukta. Okay, Viraj. Good, Mohammed. Good, Tanisha. Anyone else? Any other answer? Very good, Tanisha. Okay, good, Viraj. Good, Shruti. Okay. Now, see, this particular question, is management required to, okay, is something, is not required to be, is management required to amend the financial statement? Is not something, is required to be answered standalone on the basis of essay. Understand that thing. That this is not something, is required to be answered basis of only standalone essay. I need to look into what is applicable financial reporting framework over here. So let's say it's a limited company. Okay, I'm talking about a limited company. So applicable financial reporting framework. Which will be the applicable financial reporting framework for the this particular company? I would say schedule 3 plus Ind AS. I'm not going into part and divisions. Okay. So schedule 3. Schedule 3 plus Ind AS will be my appropriate financial reporting framework. Now, as per appropriate financial reporting framework, like, can you tell me the requirement for the events that are occurring after the date of financial statement? What are the requirements as per the applicable financial reporting framework? Come on, guys. What is the requirement of applicable financial reporting framework with respect to these events? Come on, guys, quickly. What is the requirement of applicable financial reporting framework for these type of things? Okay. Good, Tanisha. Okay, good, Yodagunalu. Good, Vansha. Good, Viraj. Very good. Okay. Now, see, there are two things we need to understand. Number one, what is the requirement of applicable financial reporting framework? Now, as per applicable financial reporting framework, okay, I need to understand that what is the requirement here. Now, here the applicable, I'll go for the Ind AS as of now. Okay. Now the applicable Ind AS here is my Ind AS 10. which is events after the reporting period. Now, this particular NDS, events after the reporting period, has criteria for the adjusting and non-adjusting event. Now, for the non-adjusting event, okay, uh, non-adjusting event are not required to be adjusted. So I'll write it as per para 10 and 11 of Ind AS 10. A non-adjusting event okay, a non-adjusting event, okay, shall not adjust the amount recognized in the FS. For a non-adjusting event, an entity shall not adjust the amounts recognized in its financial statement to reflect the non-adjusting event after the reporting period. Now, the question comes is whether this is an adjusting event or a non-adjusting event. Okay. So we need to classify this as an adjusting or a non-adjusting event. Based on that, we can say, now, as I told you, this is non-adjusting event. Reason because even, in days 10 also says that a decline in the fair value of investment between the end of the reporting period and the date when the financial statements are approved or issued, okay, is a non-adjusting event. The decline in the fair value does not normally relate to the condition that were there at the end of reporting period. And in my question also, it's the same, that on the date of audit financial statement, that is 31st March 2023, there was nothing. The war that has broken out, it's after the date of financial statement, that is 34/2023, due to which there was a decline in the share price by 90%. Now, this is not an adjusting event. This is a non-adjusting event. So what is the requirement for the non-adjusting event as per Ind AS? What is the requirement for disclosure requirement for non-adjusting event? What is the disclosure requirement, or what is the requirement for disclosure of non-adjusting event? What Ind AS says, I want to know in detail. I hope you guys have already covered Ind AS 10. So what Ind AS 10 says about the non-adjusting event? What you are required to disclose? Come on, guys. So what Ind AS 10 says about non-adjusting event? I want exact requirement of Ind AS 10. What Ind AS 10 says? Do not copy it from the Ind AS. If you are thinking that, I'll go to Ind AS, I'll copy the text and paste it here, do not, attempt that. Reason because try to remember whatever you learn from that particular, if you have read the Ind AS 10, try to remember and, learn that, okay, like, bring that up in your own words that, okay, what is the requirement of disclosure? Okay, you don't know. Okay, Geeta, I'm looking for specific few things that are required. See, I know disclosure is there, but what is required to be disclosed in that disclosure? What are the things which are required to be disclosed? I know disclosure is required, but what in that disclosure is required? That is something I'm asking. Come on, guys. So what is required in that disclosure? I want to understand that what items are required to be disclosed, like what matter, what should be there in the disclosure. Come on, guys. I'm only getting, answers like only disclosure in notes to account. I know disclosure in notes to account or only disclosure is required, but there are things which are required to be mentioned in that disclosure. Okay, I'll tell you. I need to disclose two things. Pretty simple. Nature of the event. Second, estimate or its financial estimate or its financial impact. Or if you cannot measure estimate or financial statement, then statement that such an estimate cannot be made. Okay, so I'm saying these two things are required to be done over here. Now the question was that auditor is asking to amend the FS. Is auditor correct? Is the management required to amend the FS? So the question comes is, now if management is not required to amend the FS, okay, the answer is coming no over here. The auditor is not correct. In that case, is auditor correct? Again, the answer will come no. Okay, fine. Now the management disclosed these things in the financial statement. Let's say question number 3. How auditor should audit the disclosure? That is very important part. Okay. So how the auditor should audit the disclosure? See, now the question comes is how to audit. And for that, we have the essay in picture. But first of all, to reach that point, that what is required to be audited, whether management is required to amend the financial statement or not, we need to refer to the applicable financial reporting framework. So basically, whether the auditor is required to, audit is something we will understand from essay. But when auditor is asking management to amend the FS, okay, and give the effect of the non-adjusting event, over there, auditor is incorrect. Auditor is not correct. Management should not amend the FS. Rather, they just disclose as per the applicable financial reporting framework. So this type of question can come, that okay, where you have a application of a applicable financial reporting framework, on the other side you have application of a standard, auditing standard. Now the question comes is that okay, if management is not required to amend the financial statement, how auditor should audit the disclosure, or whether the auditor is required to audit the disclosure. So how this will impact the audit requirements now? That is the big question. So again, this is the event. Now, from the point of view of SA, this events fall between the date of financial statement and the date of audit report. This one, date events occurring between the date of financial statement and date of audit report. Now, what auditor should do when he identifies such events? How to audit this disclosure? What you will do to audit this disclosure? Now, let's say management has given this disclosure. Okay. Let's say they were supposed to give nature of the event and estimate or impact. Let me give you a disclosure format. Let's say note number 49 in financial statement. Okay. Note number 49. Valuation of investment. Okay, this is the note. And here management has written that during the year, management invested rupees 350 crores in shares of PQR Limited, whose share price has fallen due to war in country Y, or country K, sorry, country K. However, management is sure that this is temporary fall in the investment, and the company, that is PQR Limited, is operating or is having sound financial position. Okay. As a result, management does not expect any financial risk in this event. Okay. Now, this is the disclosure that has been given by the management, that during the year, management invested 350 CR in the shares of PQR Limited, whose share price has fallen due to war in the country K. However, management is sure that this is temporary fall in the investment, and company, that is PQR Limited, is having sound financial position. As a result, management does not expect any financial risk in this event, or in this investment rather. Okay, this is a note that management has given in the financial statement. Now audit it. How will you audit this? This is a note that has been given in the financial statement. Now you are required to audit this one. Audit this note. Now, whatever details are written, how will you audit these details? What you will do? Management was supposed to give disclosure. Amount of the investment is there. Nature of the event is there. Management has certified the criteria of Ind AS 10. Now, what you will do? Let's say you are the auditor. Now, what you will do? How you will audit? Come on, guys. How will you audit now? Come on, guys. How will you audit this particular event or disclosure? Good, Shruti. Very good. What additional you will do, Mancha? Come on, guys. What additional you will do? Or how audit? How you will do audit? Okay, very good, Mohammed. How will you audit what is written in the note that is there in the financial statement? This management has given the note. You asked management to, provide the disclosure. Management provided this disclosure. How will you audit this? How will you audit this particular note? Okay, Charu. But Charu, if you are saying if there should be a provision, but this is a non-adjusting event as per the financial reporting framework, and if this is a non-adjusting event, then I'm not required to provide an adjustment in the financial statement. I'm not required to adjust the numbers. Then how can I provide a provision? How can I create a provision if this is a non-adjusting event? Let's say I have checked the rate which is given by the management. I have checked with the market rate. That is thing. Okay, share price, is easily traceable from the market. I can trace the share price. What else you will do? Market price, share price, I can do it. I can calculate the value of investment. That is for sure. I can do that. What else? Okay, so I'll just write the audit procedures that you guys have already, mentioned to avoid the further confusion. Audit procedures. You guys are saying number one, written confirmation or representation. Number two, check share price from market. What else? Okay, these two are done. So check share price from market, obtain written confirmation or representation from management. That is done. These are the two audit procedures that most of you guys have said that I have mentioned. Okay, fine. What other than this? Very good, Mohammed. Come on, guys. Come on, quickly. Yes, Shruti. Correct. Come on, guys. What else? What additional procedure you will perform other than this? Come on. Pretty simple. So it's not that much difficult that you think, but what is required to be done? Okay. But let's say if you are saying that I will check the share certificate and ownership, that I might have already done when I invested. So I invested in the shares of the company on 28 to 2023. So the this particular has been already audited. So there is no need to audit again the existence of that particular investment, because I already audited the existence that okay, company has invested in XYZ Limited and there is a shareholding in the name of company. So that I already audited on 28 for the transaction that has happened on 28 to 2023. Existence is not required to be audited again. So I will not audit the existence. Very good, Geeta. So some of you told that check audit report of PQR Limited, and one of you told me, uh, as Geeta mentioned, that read minutes of meeting. Okay. What else? What else, guys? Okay. Nature, timing, extent of what? Shruti, I think it is appearing incomplete. Nature, timing, and extent of reassess the calculation. So kind of check the share price and mark from market and revalue. Uh, so reassess, like the calculation could be that only, like check the share price from market and recalculate the share price, kind of. Okay, that is point number two, already taken. Can I check the Q1 FY 23-24 financial statement? Because I am as of now standing on which date? Date is 31/7 already there. I'm somewhere, after 31/7, I'm like, already June quarter is gone. So they might require to issue the limited review report of June quarter, listed company. So can I check the quarter one financial statement of FY 23-24? What is the impact over there? Can I, like, if I check the audit report of PQR, I can I will identify the financial position of PQR from financial report, audit report. But again, PQR Limited is also, listed entities. So I can check quarter one FY 23-24 financial statement of XYZ Limited. If the auditor is different, if we are the auditor, we can directly go and check the books. But if the auditor is different, then the financial statement or the limited review plus quarter one FY 23-24 financial statement of PQR Limited. Now there is two big problems to me in this particular note. Number one, I'll highlight those problems. If management is mentioning this thing that, PQR Limited is having sound financial position, how management has validated this? What management has done to validate this particular line? They are disclosing that PQR Limited having a sound financial position. So I need evidence for that. My evidence that I will check financial statement is different, but I need, how management is confirming that PQR Limited is having sound financial position. Then eight, very, very important part. Why controls around identification of such events did not uh, identify this, or did not like kind of, you can say, catch or detected this event. So see, there would be controls. Let's say for example, this is one scenario where the investment of 350 cr got converted into 15 cr. But what is the control around this particular area? How management is making sure that controls around the adjusting events and non-adjusting events? What are the controls management has placed? So you can say kind of controls for subsequent events. Are there any controls? If yes, okay, my question one will be, are there any controls? If yes, then are they designed effectively and are operating effectively? If yes, then why they did not detect this? Means there is a issue in the operation of the control or the design of the control. Okay, can I count this as control deficiency? If this is a control deficiency, whether I have relied upon this control, okay, for my testing, and if yes, then again my question will be, I means as an auditor need to revise the nature, timing and extent of audit procedure, okay, to the extent of reliance on this control. See, now if I have relied upon this control, okay, and now I identified a event which was not captured by the control, then I can call that particular event as a control deficiency. If there is a control deficiency and I have relied upon that control, means my reliance is incorrect. I need to revise the nature, timing, and extent of the audit procedures on the subsequent events. So let's say, for example, there was a team in the organization that were looking after the subsequent events, but that team did not report this at the first instance. My question itself, the team did not report this particular instance. I was the one who identified this and I declined to sign the audit report. Okay. Then management provided this amendment. So at the first instant, why the control did not detect a decline? If the control did not detect a decline, there is a failure on the part of the control, deficiency on the part of the control. I need to check, are there any other events which might have impacted my financial statement either through adjustment or disclosure and might have not been detected by the control. So I need to go to that level when I identify such event. It's not only a one singular event that I need to look at, but I need to look at holistic approach of the financial statement, that how it is impacting other areas also. Okay. So this is I could have done as an audit procedure when I am, identifying this particular control or this particular event. Okay. Any doubt? Any doubt, guys? I hope it is clear that what we are required to do as an auditor when we identify such event. Any doubt? No? Yes? Anything? Okay. If no doubts, then let's take a quick 10-minute break. And after the break, we'll gather back and continue the session. Let's take a quick 10-minute break. Hello everyone, welcome back. Let's continue the session and the topic both. Okay, so to summarize what we discussed about what auditor is required to do when he identifies an event that has occurred between the date of financial statement and the date of audit report. So in such scenario, if there is an event that is occurring between the date of financial statement and the date of audit report, auditor is required to perform and design appropriate audit procedures. Okay, so design and perform appropriate audit procedures to obtain sufficient and appropriate audit evidence. Okay, sufficient and appropriate audit evidence that all events, I'm again repeating, all events, okay, occurring between date of financial statement and date of audit report that require either adjustment or disclosure, okay, that require either adjustment or disclosure have been identified. Okay, so first my role is to identify those events. Okay, then once I identify those events, then I need to perform procedure to make sure that these events are appropriately either adjusted or disclosed. Then ensure appropriate treatment as per applicable financial reporting framework has been given. Subsequent to that, I need to understand, like, okay, how this is impacting in my risk assessment. If, let's say, for example, okay, I identified an event which was not earlier identified, okay, or I identified an event which management did not disclose to me, then I need to first understand from the management, okay, how management is, as management has established procedures to ensure that all subsequent events are identified. So how management has ensured that all subsequent events are identified. So for that, I will obtain understanding. I may perform inquiry. I will read minutes of meeting. Okay. I might read subsequent or latest financial statement available. Okay. And then I need to see whether these have been reflected appropriately or not. Appropriate treatment has been given or not. So this is I'm required to perform for the events occurring between the date of financial statement and the date of audit report. Along with that, I need to obtain a written representation. Okay. Now, these are the events. I'm referring them as the events. Now I will refer the next part is the facts known to the auditor after the date of audit report, but the issuance before the issuance of financial statement. Means facts, again, not the event, but the facts. Facts that are or that which facts which become known to auditor after date of audit report, but before date of issue of FS. Okay. If there are such facts which are there, then what is required to be done, that is we need to see. So first, we need to understand for these facts whether what is the applicable financial reporting framework requirement. Okay. Now, based on the requirement, we are required to, then perform the procedures over here. So it becomes, case to case basis scenario. I'm talking about facts which are become known to auditor after the date of audit report. Okay. After the date of audit report. Now, if you see the definition of a subsequent event as per your Ind AS, okay, if you see the definition of subsequent event as per the Ind AS, it says that event after the reporting period are those events either favorable, unfavorable, that occur between the end of the reporting period and the date when the financial statement are approved by the board of directors in case of company, or by any approving authority in case of any other entity. So when they are approved, okay, so they take it from the date of financial statement to the date of approval. Now the question comes is, what is the date of approval over here? Like, what will be the date of approval as per the Ind AS? Which date I need to consider? Because till that date, I need to, see like all the events as per the applicable financial reporting framework. So date of approval is the date when, a financial statement are submitted to the shareholders for approval. So when it is shared with the financial, with the shareholders for the approval, if it is, approved by the shareholders, it's a date of approval. Okay. Now, when the date of approval comes, okay, like for example, when it is approved by the shareholder, till that particular point in time, I need to look for the events. So there could be a scenario that when auditor issues the audit report before, and if the financial statement then goes to the shareholders, okay, in that case, the events till the date of approval for the shareholder, I need to consider as a subsequent event. So there could be some, difference between the dates which are there in the AS and the, SA in the Ind AS. That is for sure. There could be some difference. Okay. So as, we need to understand what is the date of approval over here. And let's say, for example, if there is an event that is occurring, okay, up to the date of financial statement are approved for issue, even after, public announcement of profit and financial information, that is also required to be considered as per Ind AS. So that is Ind AS requirement. And again, I will classify as a adjusting, non-adjusting event. Okay. Any doubt till now with respect to this? Now let's come back to this particular one. Facts which become known to the auditor after the date of audit report, but before the date of issue of FS. Now, when I talk about date of issue of financial statement as per SA, what is the date of issue of financial statement as per SA? So, date of issue of financial statement is a date when, audit report and the financial statements, audited financial statement are made available to the third parties publicly. So when it is published, okay, so date of FS is, this particular date will be when published to third parties. If it is published to third parties, that will be the date I need to consider over here, because that is very important to know what is the treatment. Now, there could be a scenario that applicable financial reporting framework requires you to adjust the event. Okay. And and it may happen that, NDAS or applicable financial reporting framework might not require to do anything. So first of all, whatever the treatment it is, as per the FRF, I need to understand that. What is the treatment as per the FRF? So, however, in this case, auditor usually has no obligation to perform any procedures, any procedures after the date of audit report. Okay. Auditor is usually not required to perform any procedures after the date of audit report, but the facts which become known to the auditor, that's why I use the word facts which become known to the auditor. But if there is something which is, coming to the auditor's attention after the date of audit report without performing any procedure, okay, I'm talking about facts which became known to the auditor without performing any procedures, okay, then then I need to understand whether that fact, if it had been known, to the auditor okay, at the date of audit report, may have caused the auditor to amend the audit report. So I need to understand this, that whether that fact, if it had been known to the auditor at the date of audit report, may have caused the auditor to amend the audit report. Let's say, for example, there was a fact which I came to know later about, let's say, for example, this share price one. If I would have known earlier, then would have it cost me to, amend the audit report? If yes, then I need to discuss the matter with management and those charged with governance. If yes, then discuss the matter with those charged with governance and management. See, which are those facts which will be, require you to amend the audit report is if the condition of the fact was existing before signing the audit report. For example, in this case, share price one. Let's say you identified this share price after the date of audit report. In this case, I'm saying that, let's say, for example, in earlier case, I identified something, some penalty in earlier case, I identified a 250 CR penalty after the signing of audit report on 1/8/2023. Now, the question is whether if I would have known this particular event or the fact on the date of audit report, would it have caused me to amend my audit report? Answer is yes, because this is an subsequent event. So if I need to check this particular, criteria, that if I known earlier, if I would have known earlier, then would have caused me to amend the audit report. This is something is required to be seen. This is required to be evaluated as per applicable financial reporting framework and other essays like materiality, going concern. Okay. So first of all, I need to understand whether this is an adjusting event, non-adjusting event, or whether this falls or this requires anything in the FS, this particular event. It may happen that everything has occurred after the date of audit report. So let's say, for example, I'll give you one example. I'll continue this example, this share one, okay, war broker and everything. Let's say, for example, in this case, I'll just revise the facts. So the facts is investment date, okay, or let's say, for example, I'll just prepare in a tabular formula so that you guys could see easily. So let's say date, event, okay, amount if applicable. Okay. So the date is, let's say, 28 to 2023. So date of this is a first investment in PQR shares. So the value was rupees 350 crores, 31 3 2023. Date of FS 36 2023. Date of audit report. This is nil, not applicable. 31 7 2023. Or let's say, for example, not 31, but 10 7 2023. Okay. War broke out and share price can fall in few days only. So let's say 17 7 2023, share price fell by 90%. Now the value of investment is only, let's say, 35 crore. Then comes to the 19 7 2023, date of issue of FS. Now, from this particular date of signing of audit report and the date of issue of FS, there has been some event. Now, question comes is, what is the responsibility of auditor for this particular period? So I'm asking, what is the responsibility of auditor for the events occurring between these dates? Now, what auditor, or like you can say, what auditor should do in this scenario? Question will be, what auditor should do for this? So everything has happened after the date of audit report. Now you tell me, what is the role of auditor, or what auditor should do in this scenario? What auditor should do in this scenario? Everything has happened after the date of audit report. Come on, guys. What auditor should do for this event? Come on, guys. What auditor should do in this scenario? So the date of issue of FS and the date, I would say, this is the date of issue of FS. Okay. Now, for example, I call it as this has a date of approval by shareholders. The date of AR and the date of approval by shareholders is same. 36 was when the general body or the shareholders approved the financial statement and the audit report was signed. So both are same. But date of issue is, that is issued to third parties. How would you deal with this situation? Or let's say not shareholders, but let's say make it, it's similar. Let's say approved by the board. To avoid the confusion, it is approved by the board. Approved by the board, date of approval by board, and date of issue to third parties. So this is my, as per applicable financial reporting framework. The date which I require is as per applicable financial reporting framework. This one. Shall I highlight in different color? Okay. Date of approval by board as per the applicable financial reporting framework. Now, what is required to be done for this particular events? Okay, very good, Charu. Very good, Shruti. Good, Mohammed. Very good. What else? See, in this scenario, again, the question comes, it's a game of dates, nothing else. Now, here, I need to understand whether this would have caused me to change my audit report if I would have known earlier. The answer is no. Like, this event itself requires no adjustment as per the applicable financial reporting framework, because my financial reporting framework stops here. Okay. Financial reporting framework says subsequent events or events occurring after the balance sheet date stops here. So this is the kind of here from here till here. These are the events occurring after the balance sheet date. If these are the events occurring after the balance sheet date from the date of FS till the date of audit report, then I am not required to provide anything for these events because that is something outside the applicable financial reporting framework. If this is something outside the applicable financial reporting framework, then I need to understand whether this would have caused me to amend my amend my audit report. If would have known earlier. So answer is no, because this event never existed at first place. Okay. Uh, Sorry, I think I wrote just a minute. Yeah. So this event never existed at the first place when I, was issuing the audit report. So this would have not caused me to amend my audit report. Then, if this would have not caused me to amend my audit report, then how should I deal with this? So this is as good as, events occurring after the issue of financial statement. I will show you what is required to be done in those cases. Okay. But let's say, for example, if this event would have caused me to amend my, audit report, then I need to discuss with the management and those charges governance. Okay. And I need to determine whether FS are required to be amended. This is the important part where I need to check as per the FRF whether the amendment is required or not. If yes, then if yes to above, then I need to verify how the matter has been addressed by management. Okay. If it requires an amendment, then how management has amended that. Now, there could be two scenarios where management has amended and if management has not amended. So let's say, for example, if it is required to be amended and I need to understand how management has responded, there could be two scenarios to this. One, management amended FS. Second, management did not amend. Management did not amend. Okay. Now first, we'll see when the management has amended the FS. If the management has amended the FS, okay, you need to carry out additional audit procedures on that amended portion. Then you need to perform procedures of para 6 and 7. Now, which are these procedures? Procedures of para 6 and 7. So if I talk about procedures of para 6 and 7, is this one. So these are the procedures of para 6 and 7. Okay, these are the procedures of para 6 and 7 that we already discussed. Means events occurring between the date of FS and the date of AR. these procedures. So you need to perform again these procedures to the extent they are applicable. Okay. And then provide either a new audit report on the amended FS. Okay. So either provide a new audit report on the amended FS. Okay. Or you can, do like, like if that is not the case, like management has not amended, in that case, you need to understand, okay, whether law or regulation or financial reporting framework prohibits management from restricting the, amendment. Sorry. So whether financial reporting framework or law or regulation is prohibiting management from amending the financial statements to the to give the effect to the subsequent events. Okay. And if they are prohibiting, then it is fine. If they are not prohibiting, if there is no prohibition on the amendment, and okay, the amendment is required. Okay, the amendment is required. Then auditor have two options over there. Auditor have two options over there. Number one, auditor, what can he do is he can amend the auditor's report to include an additional date restricted to that particular, point wherever, if let's say, for example, if there is a prohibition on the side of management, I need to additionally, add a paragraph that there's a prohibition on the side of management and they cannot amend the audit report. I can do that. But I can also issue a new audit report. That is also fine, conveying that additional thing or in the emphasis matter paragraph or the other matter paragraph. Or another part is, let's say for example, okay, if management is not amending the audit report, then what to do? If management is, sorry, not audit report, but the financial statement. If management is not amending the financial statement, then in that case, auditor can issue, okay, you know, modified opinion if he has not issued an audit report. But what he can do is, if he has issued the audit report, then he needs to, make sure that audit report is not circulated with the financial statement to the third parties before the amendment is made. Okay. And if it is still circulated, then auditor needs to seek the action. So, two scenarios. If law or regulation prohibits, what to do? If law and regulation does not prohibit. Okay. So let's see the second one first. When law or regulation does not prohibit, does not restrict the amendment of the financial statement to cause the subsequent event. In that case, audit report can be issued amended audit report and either provide a new audit report or provide additional date in same audit report. Okay. Include an additional date in the same audit report restricted to that amendment, indicating that audit procedures subsequent to that are restricted to that particular amendment only. So additional date in the same audit report to specify that audit procedures are only provided, only, audit procedures have only covered the events okay, which are mentioned in the paragraph or which are, specified somewhere. So I will call it the subsequent events to the new date. Okay. Again, understand what is required to be done over here. See, if management is carrying out the amendment, either I can issue a new audit report or what I can do is I can provide additional date in the audit report itself. That, okay, this is a new date of the audit report, but from the old date to the new date, whatever I have done till, restricted to this particular portion. I have done, additional procedures, but restricted to this event. So let's say, for example, in my audit report, I'll show you one example. Let's say this is my audit report. Okay. Independent auditor's report. I usually have a date over here. Let's say earlier date was 30/6/2023. Okay. Now what I will do is I'll amend the audit report to include an additional date. So I'll do additional date over here. Let's say 31/7/2023. Okay. To restrict, to bring, till the date of that amendment. Let's say amendment happened on 30/7/2023. Okay. So I will add a date, additional date till that particular amendment date. Okay. And, I will provide that, this is limited to that particular amendment itself. This particular date is date of amendment of FS. Okay. I will include an additional date in my audit report, indicating that the audit procedures on subsequent event are restricted solely to the amendment of financial statement. Means somewhere I will mention that the difference between these two dates, I have only performed additional audit procedures on subsequent event. So I have not performed all the procedures, but I have only performed additional procedures on the subsequent event. That is, amend the auditor's report to include an additional date restricted to that amendment itself. Okay, indicating that the auditor has performed the procedures on subsequent event restricted solely to the amendment of the financial statement. Okay. If I am issuing altogether a new or amended audit report, I'm not adding additional date, but I'm, second type of is that I'm already issuing other, different audit report. Let's say independent AR. Now I am including the date over here. Let's say it's a new audit report or the amended audit report. I am directly doing the date of 30/7/2023. I'm not mentioning my old date. In that case, I need to have a EOM paragraph. Okay. Or other matter paragraph specifying that subsequent event and procedures performed. So in that case, I will mention in this other matter paragraph or EOM paragraph that, okay, usually I was supposed to issue audit report on this date, but from this date to this date, I have performed additional procedure relevant to the subsequent event itself. So there are two ways when the management is amending the audit report. Oh, sorry, financial statement. when the management is ready to amend the financial statement, either you can provide a new or amended audit report, or provide an additional date in the same audit report to specify that the auditor have audit procedures have only covered the events to the new date. Okay. So these are the two scenarios when management is ready to amend the audit report. I'll write it full word. But now the question comes is when management is not ready to amend the audit report. Again, there will be two scenarios in this case. Okay. One, if AR is not yet issued. Okay. If AR is issued. If AR is not issued, then modify the opinion. If AR is issued, means you have signed. Rather than issued, I'll say signed. Signed but not issued. Means I have signed the audit report, but formally I have not given to the entity as of now. If I have signed the audit report but not issued to the entity, in that case, I can modify the audit report because I have just only signed the audit report, not delivered it to the management for publication. So I can amend it. If AR is issued, then there are again, I need to check, uh, what should be done. If AR is issued, then ask management to stop circulation or ask management to not to circulate. And if management still circulate, then seek legal advice. What could be done? So this is a scenario when management did not amend the audit report financial statement, but it was required to amend it. But amendment was required. Clear? Any doubt till now? This is for the facts which become known to the auditor after the date of audit report, but before the date of issue of FS. Any doubt? Okay. Date of audit report and the date of approval by board of directors can be the same. Yeah, kind of. Either, see, I need to issue audit report. Okay. Uh, I can issue the audit report same day when the financial statement are also approved by the board. So they can have the same date. That is perfectly fine. Okay. So I can, that is perfectly fine that the date when the management has, approved or BOD has approved the financial statement, I can have the date of audit report. There is no issue in that. Any doubts? Any further doubts? Any further doubts? So it can be same, it can be, after that, but cannot be before that. That is for sure. First part of the second case. Which one? Management amended the FS or management did not amend the FS? Charu, which part you are referring to over here? Which part you are referring, Charu, over here? Tanisha, last one I haven't received. I think only no one. I haven't received any other queries from you. Can you rewrite the query if it is like I cannot see any query as of now? Can you rewrite? Okay. If management did not amend the audit report, okay, let me explain it again. So, if management did not amend the audit report, then we need to see whether the audit report is, not yet signed. It's signed but not yet issued. Okay, over here. Audit report is signed but not issued. But not issued. See, this could be the scenario due to some procedures, administration, and everything. Audit report is signed, but a day or two takes till the time it is again given back to the management officially. So if the audit report is signed but not issued, in that case we can modify the opinion. But if the audit report has been issued, okay, signed and issued both, okay, issued means after signing. So if audit report is already issued, then we need to ask management not to circulate, and if still management circulate, then we need to take a legal advice. So if management agrees to amend the audit report, then there are two scenarios. Either you can issue a new audit report or amended audit report. So this one I told you. If management agrees to amend the audit report, then financial statement. My mistake. I don't know why I keep saying audit report. If management agrees to amend financial statement, then you could do either issue a amended independent auditor's report, amended or new, okay, independent auditor's report with the new date, where you need to mention in EOM or OM paragraph about this particular change, or you can include an additional date in the existing audit report, and somewhere you have to provide that the procedures, additional procedures have been performed on the subsequent event. So the additional date refers to the additional procedures performed on the date on subsequent event. So there are two options. Either mention one date, that will be the amended or new audit report. Either mention additional date to signify that original report was issued on 30/6/2023. But after that, there is an amendment. I have performed additional procedures, and this is the additional date for this particular audit report. So you could do these two things over there. whether it's an adjusting event or non-adjusting event, it is totally dependent upon applicable financial reporting framework. I need to decide as per financial reporting framework whether it requires an adjustment or disclosure. SA doesn't have a part in deciding whether an adjustment or disclosure required. No. SA only says that if an adjustment is required, then whether the adjustment has been made. If a disclosure is required, then whether the disclosure has been made. And if nothing is required, if no change in the financial statement is required, then auditor is not required to perform any procedures. So applicable financial reporting framework, that is the Ind AS or my Schedule 3, decides what is required to be done for a particular event in the financial statement. Okay. And accordingly, I need to take that event from as per the applicable financial reporting framework. I need to fit in the categories which are given the standard, okay, for the audit procedures. So standard has certain categories of events occurring between the date of FS and the date of audit report, event occurring after the date of audit report but issue of the financial statement, and events occurring after the date of financial statement has been issued. Why these categories are there? To guide you how the audit procedures are required to be performed in if events fall in any of these categories. Okay, so I'll take the subsequent event with whatever amendment is required to be done in FS from the Ind AS or applicable financial reporting framework. I will put in the relevant category of the SA and I will see what audit procedures are now required over here. So SA only tells you the audit procedures based on the category. Ind AS or financial reporting frameworks tells you whether the amendment or disclosure is required or not. So the dates and the timeline for the amendment or disclosure is as per the applicable financial reporting framework. But whereas the SA tells me the date and timeline for the audit procedures. So that's why we need to keep it both separate. And, we need to, see first whether the amendment or disclosure is required. And then we need to see what audit procedure is required. Yes, Charu. So circulation to the members or KMPs. When you circulate to the members, it is usually circulating to the public. So it is available in public. So circulation to members is kind of circulation to public only. Tanisha, you can either provide both dates in the case of amended FS or amended audit report. Either you can issue with a new date or amend the date. Both options are available. I hope I'm clear, guys. Any further doubts? See, why it is bit confusing reason because dates and timeline are also given in Ind AS, dates and timeline are also given in SA. We need to understand which why and for what purpose dates and timelines are given in Ind AS and for what purpose dates and timelines are given in SA. No, Shruti. So I need to check whether the event is an adjusting event or not based on my Ind AS or whichever applicable financial reporting framework it is. Based on that, I need to see whether this event requires an adjustment or a disclosure, or whether this is an adjusting or non-adjusting event as per the applicable financial reporting framework. Now, once I decide the treatment for the event, I need to take that event. I need to check in which category of, in which category as per my standard it is falling. And based on that, I need to perform the procedures, additional procedures based on the category which is given in the standard. So standard will give me what audit procedures are required to be performed. SA will give me what audit procedures are required to be performed. And Ind AS will give me what adjustment is required to be done in financial statement. Any doubts, guys? Any doubt? Any doubt? Okay. Now coming to the third part of this particular standard, which says that events that are occurring or known have come facts which are known to the auditor after the date of issue of financial statement. Facts which become known to auditor after the FS has been issued. Okay. After the financial statement have been issued, okay, the auditor has no obligation to perform any audit procedures. First of all, we need to understand once audit report is issued or financial statement have been issued, auditor auditor usually have no obligation to perform any additional audit procedures. So auditor usually has no obligation to perform additional audit procedures. Okay, regarding such events. However, again my question comes is, however, that if without performing the procedure, a fact become known to the auditor that it had been known earlier at the date of audit report might have caused the auditor to amend the audit report. Again, if without performing procedures, if the fact known to auditor, or I'll say if the fact only, if the fact had been known to auditor at the date of audit report, okay, may have caused the auditor to amend the audit report, okay, then again, now when I write this particular sentence, it has a meaning to it, like may have caused the auditor to amend the audit report. Now when a event will cause me or fact will cause me to amend the audit report, when it is not in compliance either with the applicable financial reporting framework. Understand one thing. Let's say there's an event which is not required to be anywhere based on any information. It is not required to be reflected in financial statement. Okay, if the event was not required to be reflected in financial statement either through a disclosure or through amendment, then why it would have caused me to amend the audit report if would have known earlier? Okay, in simple terms, I'll tell, if I give you an example, let's say share one, this share, uh, this one, this share one. If the NDS doesn't require any adjustment, any disclosure, because everything has happened after the issue of audit report. Let's say this, I'll amend this bit to to make it suitable for the current example. So what I'm doing is I'm saying that this is date of AR, date of issue of FS. Everything happened till here. Everything is closed by 36/2023. Now, after that, in September, something has happened. War broke out and share price fall. By the June, everything was complete. Audit report was issued. Everything was done. But in September, something has happened. Now, will you go and change your audit report of June, which you have issued for FY 22-23? Answer is no. Okay. The reason because this event is something post issuance of my financial statement. There was no evidence that this war is going on. Otherwise, let's say, for example, if any current event is happening, war is happening, will I amend all my previous audit reports? Answer is no. There is a limit, time limit, because of which I need to give the impact. So financial reporting framework doesn't require me to amend, for an event which is after the date of financial statement, issue of financial statement. If my applicable financial reporting framework doesn't require me to amend as a management, doesn't require me to amend, then what would have caused me to amend my audit report? Understand that point. If let's say financial reporting framework is not requiring me to amend the audit financial statement, then why would have I amended my audit report if I would have come to known this fact earlier? I would see in which scenario I will amend my audit report if something was required to be done, but it has not been done. Only then only I will amend my audit report. I will modify my opinion. If management was supposed to modify or provide an adjustment in the financial statement, or management was supposed to disclose in the financial statement, but they have not done. Okay, but they have not done. Now, I, as an auditor, will see, okay, management has not done this. I will amend or I will, modify my opinion because management has not done this. Means there is something which has caused me to amend the audit. But if management was not supposed to amend the audit financial statement, if management was not supposed to, provide an adjustment or disclosure at the first place itself, then why would I also, modify my opinion? So in that case, whenever I use this term that, may have caused the auditor to amend the audit report, means management was supposed to do something which management has not done. That's why I might have, amended my audit opinion, audit report if this would have known me to earlier. So I'm only talking about events that are indirectly, I'm talking about only those events which require the adjustment or disclosure in the financial statement, and management has not done that. I'm not talking about any event which, the applicable financial reporting framework doesn't require any adjustment because that would have not caused me to amend my audit. Understand the difference between both. Okay. So if without performing the procedures, if the fact has been known to the auditor at the date of audit report, which may have caused the auditor to amend the audit report, then I need to do something because management has missed out something. If I would have known it earlier, I would have amended my audit report. I would have modified my audit report. I have missed out something I have identified that management has missed out something. So kind of, there is something there is a miss. Something has been missed out. Okay. By the management. And if I would have come to known earlier, then I would have amended my audit report. In this case, what I'm required to do, the things which I did here, same facts, the things which I performed here, like, all these things. First, I need to check what is the amendment required, whether financial statement requires an amendment or not. Again, how the management is making sure they are addressing this matter. Everything is same as above. So the procedures, same as specified in facts which became known to auditor, okay, after the date of uh, sorry, yeah, after the date of audit report, but before issue of FS. So whatever audit procedures we discussed over there, the same will be applicable here. The same will be applicable here. There will be no change in that. Okay. And again, understand the things which caused me to amend my audit report. That is important over here. Clear? Any doubt? Abhilash, I did not get your query. Can you repeat it again? Explain in more detail. Any doubt, guys? So understand that amendment in the financial statement, either through an adjustment or through a disclosure, is as per financial reporting framework. If management messes out that thing, and if I come to know after issue of audit report, then that would cause me to amend my audit report if I would have known it earlier. That is a scenario that I need to consider. Otherwise, if there was no adjustment required, management did not make any adjustment, why would I amend my audit report if I would have known it earlier also? So understand in which scenarios it would have caused me to amend my audit report. Uh, Abhilash, they are both vastly different. I am not sure. Is there any connection between both? So they are vastly different. And again, I need to understand which quality report you are referring over here. When I say amended report, means amended audit report. I'm not sure which quality report you are referring here. So usually there is no connection between a quality report and an amended report. So quality review, if you are talking about quality review report that is issued by the quality review board, that is altogether a different thing. There is no connection between the quality review report and the amended audit report. Any doubt, guys? Any doubt? So this essay is not only based on your only auditing standard, but it has a combination of auditing plus applicable financial reporting framework, that is NDS. Because it is not only it has not the role of only essay. So you need to understand what is the requirement of applicable financial reporting framework in order to decide whether there is any requirement by the auditing standard. I hope I'm clear. Any doubts? No? Okay. So our next lecture on Wednesday, okay, that is completion and review, December 6th. What we will be doing is we will be discussing again going concern. Okay. So essay 570 going concern. But before I discuss, in detail essay 570 going concern, I want you guys also to go and, you know, have a look at that particular essay in detail so that I can, when I'm explaining the practical side, you will be able to understand that particular concept in detail. Okay. So, I request you guys to read that particular essay 570 going concern in detail, understand that requirement of the essay, try to understand, bring up your questions. And when I will discuss practically, then it will be, helpful for you guys, to correlate whatever you have discussed, whatever you have read and what we are discussing. Clear? So, please make sure you revise the today's essay also, essay 560. Go and you can also perform some. You can also try to attempt the questions from MCQ booklet about this particular essay. Read at least read essay 570. If you want to read further, you can read further. If you want, you can read. You can practice some questions. You can bring up the course questions also. If you have doubt, I can solve it. But uh, you know, at least read essay 570 because essay 570 is very important. And when I say very important, reason because, uh, essay 570 is kind of a essay where, everyone pays a little more attention compared to other essay. Reason because going concern is a very, very big, area. Whenever an auditor is auditing, he needs to make sure that going concern is there, going concern assessment is there. So that's why it has very important role to play. Also, if you want, if you want, uh, there is a there are implementation guides. A lot of things are there, like implementation guide on SA 560, implementation guide you can find on SA 570 also. Okay, so you can go and read that also on the ICAI portal, implementation guide. Now these implementation guide helps you to understand how a essay can be implemented practically when we are doing the audit, because you know what we are learning here and what we have to do practically has a difference, a bit of small difference, not that much, because we need to apply whatever it is written, whatever the part it is in practical scenarios. Okay, so to understand and how we can apply practically, there are implementation guides available on the ICI portal. You can go and you can read those implementation guides and you will get a good understanding, very good understanding. Even what I can, what I have is there are audit working paper templates. Okay, audit working paper templates. Like in those templates, you can also check about what you say, uh, you know, a working paper on the going concern assessment. So you can go and you can check the going concern assessment working paper, that how it looks like, what are the scenarios in that, and you can have a look onto those areas. So you can read as much as you can. You have a lot of material available with respect to this. Okay, guys. Uh, okay. So there is one question: what is applicable AFRF? That's the applicable financial reporting framework. India Schedule 3 or whatever it is applicable as per the company. So, okay, essay tells us how to audit. India tells us how to prepare the financial statement. That's it. That's the difference between both. Okay, guys. Okay. Thank you, guys. Thank you for your time. I'll see you in the next lecture. Thank you. Ashok ji, session concluded. Thank you.